you're a professional?
Are you?
That's it, Clark. Show him who's boss.
Oh, we're all in this together.
Hey everyone, what's going on? Welcome back to another video on the Clark Griswold YouTube channel. I am Mr. Clark Griswold. Welcome to you guys. If you are new to the Strat or new to the channel, then welcome to you guys as well. This channel will change the way that you guys trade in the stock market, okay? I promise you that. It's the easiest strategy you can come across. If you haven't done so below, hit that subscribe button and hit that bell. That bell will give you the notifications when I send out videos just like this one. I send out videos every day for you guys, okay? I send out watch lists every day. I send out top 5 watch lists every day. I send out weekly swings, monthly swings, informational videos, motivational videos. I have over 200 videos for you guys to learn from, okay? Learning tools. I've got what these candle numbers mean, entries and exits, how to trade the gap, which we are going over again today. This is the second gap video I've done. How to draw broadening formations, how to trade a 3-1 setup, how to trade a double inside bar setup, a single inside bar setup, an outside bar setup, 3-1 setup if I didn't say that already. Sarah Strat Sniper's 50% rule, how to trade that. Okay, over 200 videos for you guys. You can also follow me on Twitter at Mr. Clark Griswold. You can DM me there. You can ask me any question there you want. There's no silly or dumb question. Ask away. I send out plays. I sent out this Netflix play on Twitter. I called out the gap that it was about to crap and continue to go down. Okay, so I called that one. And then, again, you can also comment on any of my channels or any of my videos below, okay? Ask questions down there. I usually get back to you guys within the same day. I'm pretty adamant on trying to get you guys the answers that you're looking for within a timely manner. In saying that, guys, I spend a lot of time doing these videos for you guys. I enjoy doing them, but it takes up a lot of my personal time. So I'd also like to keep this free for you guys. And the way we can do that is by you guys watching the ads on the videos. And let the advertisers pay me to make these videos for you guys to learn. Let's keep the money in your guys' pockets. Let's let the advertisers pay to pay me to teach you guys, okay? And for you guys to learn. Let's keep it free for you guys because you shouldn't have to pay anything to learn this stuff, okay? So I want to go over the gap and how they work, okay? My last video, I think I went over it on a 30-minute time frame. This one, I want to go over it on a 15-minute time frame, okay? I think it works a little bit better. I usually tell people to use a 15-minute. You can use the 30. There's no problem with that. I like the 15 a little bit better, okay? So this is the daily chart on Netflix. And Netflix opened up right here, okay? And this was the gap, okay? We opened here. Here's our gap from here to here. So let's go to the 15-minute chart, and I'll show you guys how this trade played out. Okay, and then we'll go over probably Neo and SPY as well. So here we are. This is your first 15-minute bar. I'll zoom in on it. That's your first 15-minute bar. Okay? So we wait for this bar to open. And then if it breaks the low or the high, that's when we can play the gap, okay? So Netflix decided to crap. So it's called a gap and go or gap and crap. So we could have continued up to go or we could have crapped, which we did. Okay, so take put options on this as soon as we break this trigger, okay? You let that 15-minute bar open and those become your triggers, okay? The top and the bottoms of the wicks. We triggered to the bottom, okay? And then you put in your targets. Okay, let's change this to yellow just for so you guys can see it a little better. There we go. I'll take this one out. That's our trigger, and then we have targets all the way down. So there's a bunch of different ways that you guys could have played this. Okay, we triggered. This becomes your new stop loss, okay? So you don't lose anything. We're in the trade. Let's not lose anything if it reverses on us, okay? That's your new stop loss. Then we break first target, okay? Again, two ways to play this. You can make this target or magnitude or pivot point your new stop loss, or you can stick with this yellow here, okay? Your trigger, okay? And see what happens. If you would have played this, you would have been out of the trade. This trade was about 30 to 40 bucks in that range, okay? Maybe a little bit more. If you left this yellow line as your stop loss and you thought, well, I'm okay breaking even on it, let's see where this thing goes. Well, it continued down, okay? We didn't really have a reversal after this, looking for a break of the candle. I'll show you what I mean. Okay, so we came all the way down into this range. This trade down here, we didn't quite hit targets, but this was a $100 trade per contract, okay? If you would have taken this trade on Netflix, you would have made $100 in this range right here, okay? And again, you could have made this once you passed this, your stop loss, you would have been out as it reversed up, okay? Or you could have played this. Then we went down even further. At this point, okay, we're way past this first target and we've almost tagged this second target. You can either make this first target your stop loss or on a reversal, okay? So what happened right here, we had a 2 down, 2 down, 2 down that finished green, another 2 down, another 2 down. Then we had a 2 up. This right here, guys, would have been your sign for a reversal, okay? So you had your break, you had a 2 down, 2 up reversal. That yellow line would have been your stop loss, and you would have been out of this trade at around, it would have been a $60. If you would have stopped here, you probably would have been anywhere from 30 to 60 bucks, okay, per contract. Okay, so that's how you play the gaps. That one's on Netflix. There was 2 more that gapped. We can look at Neo. We'll go to the daily chart on Neo. If it goes to the daily chart, there we go. Slide up. Okay, here is our gap. We opened here, right here. There's the gap. From here to here is the gap. Okay, there's no candle in here. That's what the gap is. Okay, so let's go to the 15-minute chart on Neo. Okay, and I'm using Neo and SPY specifically. I'm using Netflix because I called Netflix out on Twitter. I'm using Neo and SPY because I follow Neo and SPY very closely every day, okay? So that's why they are on here. Here is our gap, okay? This is our first 15-minute candle of the day. And we wait for it to close, okay? And then where are our triggers? Our triggers are here or at the top. So we broke the bottom trigger and we hit 1, 2, not quite the third target, okay? So you could have taken profit there. You could have said this is your stop loss. You would have broke even, okay? Could you have got back into it when it came back down through that trigger? You sure could have. And if you decided to stay in this trade because you wanted it to, you were looking for a reversal candle, okay, that's the other way to play this. You guys ask me all the time, how do I manage my trade? Well, there's a bunch of ways to do it, guys. You can set your stop loss there. You can wait for a reversal candle. We didn't get one here. Yes, it broke through the trigger, but we didn't break the high of this candle, okay? It was a 2 up green. It's also a shooter candle or an inverted hammer. So you guys have to watch the trades, and I can't do it for you guys, but I can tell you how to do it, okay? And I can give you different scenarios on how it works. Sometimes they work, sometimes they don't. That's the stock market, okay? But we had this 2 down, we triggered, hit targets 1, 2, we came all the way back up. There was no reversal. If you made these your stop losses, congratulations, you had a really good trade. If you stayed in it because you were waiting for a reversal, congratulations, you had a really great trade. Okay, so we had another 2 down, then we had another 2 down, then we had another 2 down, and we hit 1, 2, 3, 4, 5, 6, and almost this 7th target before we retraced all the way back up to the trigger line, okay? And this, if you were playing a reversal, a 2-2 reversal back to the upside, and that was your stop loss, this right here would have been where you guys got stopped out, okay? Or any one of these green targets that you would have set as your stop loss. So Neo, if you guys played the gap, or if you would have played the gap, you should have won on this trade, okay? Should have been a winner for you. And let's go to the last one here, SPY. SPY on the daily. Here's our gap, okay? We closed here, we opened here, we gapped, and we, oh, sorry, wrong one. Closed here, basically the same thing. Closed here and gapped all the way down to here, and we trended down. And look at what we hit. I didn't look at this previously, but this is based off of a broadening formation. Okay, we tagged the bottom of that broadening formation. Here we go. Look at lower low, lower low, lower low, lower low, lower low. This brought, and go watch the broadening formation video, guys. This isn't a coincidence that this happened, okay? It's not a coincidence that we're tagging this line. Okay, do we look for a reversal tomorrow on SPY? Possibly, but we need an actionable signal. So we need this to be a 2 up to cross here. So if we triggered here, then yes, that's our actionable signal to head back to the upside. Okay, and then where's the top of that broadening formation? Well, we drew a line here, we drew a line there. The bigger one is way up there. That's the longer one, okay? So higher, lower low, higher high, lower low, higher high, lower low, come back, tag up this one, and lower low again on SPY. So I got off a little off track there. Let's go to the 15-minute to see how you would have played this gap on SPY. And like I said, I haven't even looked at this. I just know SPY gapped. Okay? So let's go to our opening range breakout of SPY on the 15-minute gap. And we had this 2 down green. Okay, then we had an inside bar. So originally, we set our triggers there and there. And you guys don't need to draw these lines on here if you know that the top and bottom of the wicks are the triggers. I'm just showing this visually for the video, okay? So once this bar closes, those become your triggers for the gap. But then we had this inside bar. So then we move our triggers to the bottom and the tops of that inside bar. And then if we break that, then we're in. Okay? I haven't drawn targets on here. You guys can go back and check those out. I have to go quite a ways back to... I'm not going that far back. You guys can take a look at those ones if you want to review this SPY trade. But let's just say you base it off of a reversal, okay? You were looking for a reversal. That's where your stop loss was. This, guys, would have been a fantastic trade, okay? $5 move, $4 move on SPY is huge on options, okay? So we broke that trigger, 379.59. We had a 2 down, 2 down, 2 down, 2 down, 2 down, tag the broadening formation. And at that point, you could have thought, we may look for a reversal. And sure enough, we hit it, came up. We've got this hammer candle, and there. Back to the 2 up, okay? 2 down, 2 up reversal to get out of this trade. That right there would have been your stop loss right there, okay? Then you would have had a significantly good trade off of this, okay? You could have sold at that broadening formation and you would have hit this trade perfectly. And Broadening formations are not a coincidence, guys. They're there. They mean something. We put them in for a reason, okay? And we tag that thing exactly. Exactly. So this, again, would have been a really good trade. And that's how you trade gaps. It's very, very simple. 15-minute bar, break the high, break the low. And it doesn't always work, okay? I'm going to tell you that right now. This is not a foolproof plan. I'm going to see if there's one more on here. I know we had a bunch of them. Keurig Dr. Pepper, okay? This was a gap right here. So from here to this open, so let's go to the 15-minute and see how Keurig played out. I don't know. I haven't even looked at this thing yet, but we're gonna have a quick peek. Okay, and here's one that probably wouldn't have been as great, but it still worked. Okay, so again, what do? This 15-minute candle closes, trigger 1, trigger 2. Okay, then we have this inside bar, so we didn't trigger anything. So now our inside bar is a trigger. Trigger 1, trigger 2. We broke to the downside, hit target 1 right there for a win. And I'm going to see if I can tag... There's nothing else in here. That would have been your next closest. That was your next closest. Okay, so again, this you could have taken as a really good trade. Could have taken some profit there. And two ways you could have had stop losses on here. Again, you could have used the top of this candle, which you guys wouldn't have been, you still would be in this trade because you didn't break through here, okay? So this would have been your first stop loss. You break through, take some profit or not, come back up, okay? You're out of the trade, okay? No big deal, no love lost. No win, no loss, you just break even outside of your fees. Now, the other way you could have done this is a reversal right here. Okay. This would have been your reversal to the upside and you would have been out of the trade again. Or you wait for the break to the high of the your original candle, which you never hit, okay? And you came back down and you would have made a little bit more profit on it. This is not the most likely scenario up here, okay? I wouldn't even have done that. I'm just saying some people do. Some people have a higher risk tolerance. That's not me. If it was me, I probably would have taken some profits in here because I like my profits. And then if we break above here, that would have been my final stop, okay? If we broke back above that candle, I would have been out, especially with no targets being hit, okay? So that's how you trade gaps, guys. I hope you enjoyed it. Make sure you check out the first gap video. That's based off a 30-minute time frame. And that's it. Make sure you're subscribing. Follow me on Twitter. And thank you very much. We'll see you guys on the next one. Bye-bye.